Hi, this is Dave. Welcome to my investment channel. Today, I'm going to be talking about 5 reasons why Tesla is going to be joining the S&P 500 in 2020. Now, this is speculation in my opinion. I'm going to try to back it up with some reasonings here. And of course, it's all controversial. There's always a possibility that Tesla won't join the S&P 500 next year, but I'm going to give 5 reasons why I think they will. So number 1 is Tesla has turned a corner in 2019 and they are growing gross margins on their vehicles right now, especially the Model 3. In the beginning of the Model 3 ramp, they were selling more of the high option vehicles, which had higher gross margin. But then as it kind of tapered down where it was a more normal mix, Tesla had to basically deal with the impact of lower gross margins, and then slowly and surely they had to basically incrementally try to raise their gross margin. And Tesla has done a great job with this. Just in 2019, Q1 they're at 20%, and then Q2 they're at 19%, and now Q3 they're almost at 23% gross margin for automotive. And I think this shows that Tesla finally is able, as Model 3 production is stable, they're able to find everything they can to try to eke out more gross margin. And this is just actually very good news. I don't see this actually reversing next year as production increases and as they get better, battery cell costs, etc. They should be able to increase gross margins. And this only leads to basically increasing gross profit and net profit as well. So for the S&P 500, Tesla needs to basically run a profit for the last 4 quarters cumulatively. So it's okay if they had a loss in one of the quarters, past 4, it's just the other 3 have to outweigh that loss. So the total net profit has to be positive over the past 4 quarters. I'm thinking, there's a great possibility, good possibility Tesla in sometime, maybe after Q2 or after Q3 is able to secure a net profitability over the past 4 quarters. And Tesla being a large cap company like it is, I'm assuming that actually the S&P 500 will add Tesla shortly after they're eligible. The second reason why I think Tesla has a very good chance next year of joining the S&P 500 is Tesla is reaping the amazing and aggressive cost reductions that they pursued in 2019. In Q1 and Q2 of 2019, operating expenses were basically $1.09 billion. And so they had to cover that, but their gross profit or other charges weren't able to cover their operating expenses basically. And even a year ago, Q3 2018, they were at 1.1 billion operating expenses. Now, what Tesla did in 2019, especially Q1 and Q2, is they did aggressive cost-cutting measures. And they took some one-time hit charges, and it was unclear exactly when and how Tesla would reap those benefits until Q3 of 2019, which was pretty much their turnaround breakout quarter. And in Q3 2019, you had Tesla at $930 million in operating expenses. Now, this is actually quite amazing. It's like close to $200 million, probably $160 million or so in cost reduction that they basically achieved compared to previous quarters. Now, that cost reduction goes straight to their net profit or loss. So that $160 million saved basically shifts a lot of their loss into either breaking even or making a profit. Now, the third reason why I think Tesla is going to be able to join the S&P 500 in 2020 is because I think the Model Y will add incremental income to Tesla. Now, here's the whole thing about Tesla in a nutshell. Being Tesla and being in the auto industry is very difficult for them to actually cover their operating expenses. Being a car company, you have high overhead basically and high operating expenses, and Tesla's no exception. Now, the thing is, which is interesting, is once Tesla is able to cover their operating expenses, then any additional new cars and new lines of cars, that gross profit gets basically added almost directly into their net profit. And let me explain this in a simple way. So currently, what Q3 2019 showed is, they showed that with delivering 80,000 Model 3s and I think it was about 17,000 or so Model S and X's. So basically under 100,000 cars, they were able to cover all their operating expenses, which was $930 million, and turn a profit. And that's significant because when Model Y comes along next year and they start to ramp that production, a lot of people, they don't understand that as they ramp production for Model Y, the extra people they hire for the factory, the workers, all that stuff, doesn't actually go into the operating expenses, that $930 million section, that line item. It goes into their cost of goods, or the cost to manufacture their cars, which is included in that gross profit figure. So basically, put short, when Model Y ramps, you don't need to expect, or I don't think we need to expect operating expenses to go up, because it's not really related. Operating expenses are more dealing with research and development, their engineers, it's dealing with their sales and other expenses. But their actually factory expenses largely go into the cost of goods. Therefore, if let's say hypothetically Model Y is able to get 20% or 25% gross margin, basically that's after accounting all the extra people that they've hired for Model Y production. And so all of that will be going directly into not just covering the $930 million in quarterly expenses, but adding into their net profit. According to Elon and some other people, and I think it's a reasonable ambition, that Model Y actually sells more than Model S, X, and 3 combined. If that's the case, then you could be theoretically looking at Tesla achieving massive net profits just off of Model Y. Let's do a thought exercise here. Let's say you have Model Y selling at 500,000 units a year at $50,000 ASP, average sales price. That's basically $25 billion a year in revenue. Over 4 quarters, let's call it $6 billion. Okay, so that's basically almost as much as they brought in last quarter, Q3 2019. Out of $6 billion, let's say they're at 20% gross profit for Model Y. Basically, that's $1.2 billion in gross profit out of a 20% margin rate. So basically, $1.2 billion gross profit will carry over. But that's the thing, they're already covering their operating expenses, $930 million, with their S, X, and 3 sales. In Q3 2019, they had $6.3 billion in total revenue. And from that margin, from that gross margin of, I guess, roughly 20%, they're able to cover the 930. But with Model Y, let's say another $1.2 billion per quarter, $6 billion per quarter, 20% is $1.2 billion in gross profit that gets carried over. Theoretically, you could be seeing Tesla pulling in $1 billion per quarter in net profit. Now, I'm not going to say that for 2020 because I think it's going to take a while for Tesla to ramp a Model Y. And I also think that there could be some people pulling their orders away from Model 3 to Model Y. So I don't think necessarily it's realistic in 2020 for Tesla to sell 500,000 or even to be at an annual run rate of 500,000 Model Y and a Model S, X, and 3, let's say combined 500,000 run rate. I think that's a little bit ambitious, but if they were able to do that, you're looking at Tesla being massively profitable, potentially, according to this rough calculation, $1 billion per quarter profitable. Now that would basically just blow up Tesla as a stock. I don't think shorts are understanding this concept of Model Y basically going straight into the profits of Tesla because their operating expenses are already being covered by Model 3. So number 3 is the most important point to understand about Tesla in 2020. And it's about how Model Y will add incremental income and basically revolutionize, transform, completely redirect the direction of Tesla if they're successful with it. Fourth reason why I think Tesla will join the S&P 500 next year is because they're investing actually CapEx very wisely and very efficiently. In Q1 of 2019, they spent $280 million. Q2 is $250 million. Q3 was $385 million. What this is showing is that Tesla has basically found a way to not spend a ton, but still do what they need to do in terms of preparing for cell production, which I'll talk about in another video, Model Y production. And they're doing this in a way where they're able to fund their future growth in a very efficient way. And I think this is very bullish, where Tesla doesn't have to necessarily spend billions per quarter just to prepare for the future. And this brings me to number 5. I think the Shanghai Gigafactory is actually going to be adding some net profit to Tesla, and that's going to help Tesla get into the S&P 500 in 2020. Now with Shanghai ramp, I think it's going to be a slow ramp, but what's interesting is as Shanghai starts to ramp in Q1 and Q2 of 2020, any gross profit from Shanghai basically will go into Tesla's net profit. Because sure, Tesla in China, maybe they will have some slight increase in operating expenses with marketing, etc. But Tesla has been in China for a long time, and so they have an established base. And so a lot of that expenses are already accounted for in the quarterly, let's say $930 million they had in Q3 of 2019. And so this new revenue from Model 3s made in China, in Shanghai, basically whatever gross margin they can achieve off of that profit will go straight into Tesla's profit. And I think even though it could be a slow ramp with 5-10% Q1 and Q2, maybe it can be 15% or 20% gross profit. And I think that could help push Tesla over the edge and become decently profitable. And I think the whole story here is Tesla has a lot of things going for it in 2020. They have growing gross margins in Model 3. They have Model Y that is starting to ramp, which is supposedly going to be the same cost to make as the Model 3, yet have a lot higher margins. Shanghai is going to be ramping up. And all of that combined means that Tesla is basically in a great position to be profitable for almost every quarter of next year. Now, there is some seasonality to Q1, and Q1 in 2019 surprised almost everyone by how low the revenue was and how big the net loss was for Tesla. But I think Tesla can manage that a lot better this year. We'll see. And all these factors combined, it turns out that Tesla is headed for possibly bullish 2020, and hopefully Tesla will be in the S&P 500, and this will be great news for all Tesla investors. Check out my other videos that I've recorded just recently, and I talk about what every Tesla investor needs to know in 2020. I talk about why Tesla is going to start battery cell production in 2020. I talk about the shorts, why they just hate Tesla, how we can understand that. And I talk about the Cybertruck and my first impressions riding the Cybertruck as well. So anyways, check out those other videos and we'll talk to you guys later. And go ahead and subscribe and add some comments in the comment field as well. All right, we'll talk to you later. Bye.